Hi, and welcome to Leavitt Brothers tutorial on bullish trend lines. Many charts set up nicely and have obvious resistance levels that are playable, but the charts don't always exactly fit the criteria of one of the bullish chart patterns we cover, so we clump them into the bullish trend lines group. Bullish trend lines are either continuation patterns or reversal patterns. Small trend lines that form after a nice advance are continuation patterns that definitely have a bullish bias. Although the stock doesn't exactly fit the description of a bullish flag, pennant, or wedge, or it may be the result of an ascending triangle or symmetrical triangle that traded beyond a 3/4 mark of their patterns, it remains a strong stock in an uptrend that is temporarily resting before continuing its upward movement. These trend lines shall be played the same as the continuation patterns discussed in other videos. This is to say a volume surge is needed to confirm the breakout, and the highs from within the pattern need to be taken out. Bullish trend lines also appear after a stock has suffered a big drop and is forming a base. The pattern should be long and drawn out. This requirement allows time for upset stockholders to sell their positions and be replaced by new stockholders who won't be so eager to sell at the first sign of strength. Like other reversal patterns, there needs to be a massive amount of buying for a breakout to be considered valid because an attempt is being made to reverse a large downtrend, and that takes great effort. Let's look at a couple random examples of trendline patterns that don't exactly fit one or the other chart patterns. ARM. This is a weekly chart that doesn't fit the description of a traditional chart pattern, but with resistance being clearly defined, it was still playable on a volume breakout. Pep Boys. This almost looks like a bullish head and shoulders, but it formed within an uptrend. We just call it a trendline pattern and look to play a volume breakout. Cleveland Cliffs. Perhaps if we backed this chart up and looked at the weekly, it would be considered a large ascending triangle or a cup and handle pattern. But in reality, it doesn't matter what you call it. All you're looking for is a volume breakout through resistance. Southern Peru Copper. The stock fell and then formed a bottoming pattern. It's not a head and shoulder, and we're not going to call it an ascending triangle or cup and handle because those patterns form in uptrends. Instead, we just note the bottoming action and resistance which would need to be taken out. In this case, volume surged on the breakout, and after pausing for a couple of days, the stock continued up on strong volume. AVR. This doesn't come close to fitting the description of any chart pattern, but if resistance can be easily defined, it's still playable on a volume breakout. AXL. Nice breakout on strong volume. Pioneer Natural Resources. This is a weekly chart that may resemble a head and shoulder, but the stock didn't fall into the pattern. Nevertheless, resistance at 50 was easy to define, so the volume breakout was definitely playable. That wraps up this tutorial. Again, bullish trend lines are bullish setups that are either continuation patterns or reversal patterns, but don't exactly meet the description of other bullish patterns. Nevertheless, they're still playable when resistance is taken out with a nice surge in volume. The extent of the advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a small gain.